Since Ghana attained independence, efforts have been made to improve access to finance, with early attempts resulting in the creation of the National Investment Bank and the Agricultural Development Bank. However, these institutions have not succeeded in delivering on the promise of consistent support for private sector growth. As part of efforts to curb the situation, the Ministry of Finance in 2018 had extensive technical engagements with KfW in Germany and other multilateral institutions like the European Investment Bank, the World Bank, and the African Development Bank to mobilize international funding and establish a financially sustainable institution. The Development Bank's focus is to help transform the key sectors of the economy over a period of time by supporting all institutions that are essential for SME transformation. These sectors include manufacturing, agriculture, ICT and allied services, tourism, and the mortgage and housing market. Speaking at the launch of the Development Bank Ghana, President Akufo-Addo assured there will be no government interference in the operations of the bank.
Government expects the Development Bank Ghana to use its strong financial position to support the growth of private sector companies, to help create high-quality jobs, and enable Ghana's private sector to compete more favorably within the framework of the African Continental Free Trade Area. The board has been tasked to scale up the bank's resource envelope so as to drive the country's economic transformation agenda and entrench the institution's international pedigree. I want to assure the board of the bank that government will not interfere in its decision-making process so as to guarantee its independence of operation and enable it to work professionally and efficiently in the larger interest of its overarching objective of helping drive private sector-led growth of our national economy. This portends bright prospects for Ghana's future.
Minister of Finance Ken Ofori-Atta also tasked the board to manage the affairs of the bank prudently.
DBG's board will benefit from diverse and rich experience of key development partners such as the AFDB, the World Bank, KfW, EIB, and others, who have also observer status on the board. DBG is designed to be financially sustainable. Total available resources for the bank, both equity and debt, is currently about $750 million. Our equity commitment is $250 million, that is Government of Ghana, out of which $200 million has been paid, while the German government, through KfW, has given DBG a subordinated debt of 46.5 million euros and an additional 3 million euros grant for technical assistance. The World Bank and EIB have given the bank $225 million and 170 million euros respectively. AFD has also given the government 40 million grant, which we passed on as equity to the bank. It is our firm expectation DBG will manage its affairs prudently and that soon it will be able to go to the market, both domestic and international, to raise its own funds on the basis of its balance sheet. This therefore requires the board and management to work hard toward getting an international rating for the bank within the shortest possible time.
Meanwhile, Governor of the Bank of Ghana, Dr. Ernest Addison, noted that the Development Bank Ghana will be regulated with the same rules as applicable to commercial banks. He said the launch of the DBG brings to the banking industry an establishment of modern market-oriented development finance institutions with a focus on providing medium to long-term financing to support key sectors of the economy.
There is broad international consensus that a strong regulatory and supervisory regime would have to underpin the operations of DFIs. This consensus was made following the observation that inadequate regulation and supervision were major contributory factors that led to the collapse of development banks in Africa during the 60s and 80s. It was on this premise that the bank, working with other stakeholders, developed the legal, regulatory, and supervisory framework for DFIs, which culminated in the passage of the Development Finance Institutions Act 2020. This is Act 1032. I wish to reiterate that the Bank of Ghana will hold DBG to the same regulatory and supervisory standards that it holds banks and SDIs, while at the same time maintaining oversight of the participating financial institutions that the DBG will be working with. The bank will strive to work in close partnership with DBG to achieve this.